All right, hello and welcome to another Bitcoin Standard podcast seminar. Today's guest is Paul Frijters, professor of well-being economics at the London School of Economics. Professor Frijters joined us last week to discuss his latest book, The Great COVID Panic, and we had a very interesting conversation about it. And during that conversation, we got into the topic of Bitcoin. And we decided that was a topic that deserved its own episode. So he's very kindly agreed to join us today to discuss Bitcoin. So I guess this is going to be an interesting discussion between me, an Austrian-leaning economist who is very much pro-Bitcoin, and Professor Frijters, who is an empirical economist, I should say. And so methodologically, we're quite different. And he's also skeptical of Bitcoin, like most economists are. And to his credit, he's come to the lion's den to bring his skepticism to to discuss this question, where most economists generally would avoid that. And seeing as we had a very, very productive and useful conversation on the topic of COVID last week, where we happened to agree on quite a lot in spite of our methodological differences in economics, I think this should be quite interesting. So, Paul, thank you for joining us.
It's great to be again with you, Saifedean, and the whole team.
Great. So, I guess I should, since I'm the one who's kind of, introducing this, who's in favor of this crazy new invention called Bitcoin, I'll try and make a brief opening statement about what the case for Bitcoin is and why I think it's interesting and why I think it's likely to win. And that's going to be a brief summary of some of the main ideas in my book, The Bitcoin Standard. The book starts with looking at the history of money, and I make the argument that historically what ends up being chosen as money, what ends up being used as money on the market, is whatever is the hardest to produce. And we have many examples that we can see that can support this contention. So in prison, people will use cigarettes because nobody can manufacture cigarettes in prison, and so they're rare and they're not easy to make. And so they get used as money. Historically, in places where people have used rare seashells as money. For instance, in West Africa, where they did not have the technology to make glass beads that were imported from abroad were very rare and they were very hard to make, and so they were used as money. And of course, most importantly, gold became money historically and was money at basically all over the planet at the end of the 19th century, because gold, the chemistry of gold makes it so that it has the money supply it has the supply that increases at the lowest rate of all metals. So by the end of the 19th century, we had been mining gold for thousands of years all throughout history. And since gold does not ruin and does not corrode and does not go bad and there's no way of destroying it, we're constantly accumulating a larger stockpile of gold. So the liquid supply of gold on the market that is being bought and sold by people is always very large compared to any year's annual production. In other words, on any particular year, even though every year we make more gold and we get better at looking for it and gold production annually increases, it's still always remains a small fraction of the existing stockpile of golds, meaning that the supply of gold is always growing at around 1.5% to 2% per year. And that's, in my opinion, that's what makes gold money. That's what made gold money. Gold wasn't money because it's yellow or shiny or nice. It's money because it's the one thing that is the least inflatable, if you want. It's the one thing whose supply can't be increased the most. In second place comes silver, but silver can corrode, and silver is more common in the Earth's crust than gold, and so it had historically a supply growth rate somewhere around 5 to 10% or so. But for all other metals, the annual supply growth rate is much larger. It's closer to 50 or 100 or maybe 200%, because every year the stockpile is being consumed. So whether it's oil or copper or zinc, these things get used in industrial applications where they get consumed, and so they're no longer part of the liquid supply that is available on the market, and so they're their new production is always very large compared to the existing liquid supply on the market, and that makes them useless as money. Because if everybody wanted to choose copper as money, a lot of kind of Marxist economists will tell you that money is a common hallucination. That if we all decide to hallucinate hard enough that something is money, then we will use that thing as money. And I think that's completely ridiculous, like everything that Marxists say. Because if we all decided to hallucinate that copper is money, then copper miners will just make a lot of copper and they will flood the market with it, and all of the money that we stored in copper will just end up being a donation for copper miners. They will meet the demand of the market for industrial copper and meet the demand for monetary copper with a lot of ease, because the stockpile of existing copper is always very small compared to the quantity that they can produce, or not small, but in the same kind of range of magnitude as the stock. So we can, if we take the inverse of the annual growth rate, we call it the stock to flow ratio, and that's a key concept in my book. The ratio of the existing stockpiles to the annual production. And so for gold, this has historically been something around 50 to 60, 70 maybe sometimes. For silver, it's around 20. Historically, now it's much lower. It's closer to 3, which is why silver is losing its monetary role. And for all other metals, for all other market commodities, that ratio is closer to 1. So every year, we're producing roughly what we consume every year. Maybe 50% more, 100% less, or 50% less, 50% more. But generally, with all these non-monetary commodities, they can't have a monetary role because the stockpile is very similar to the annual production. So that, in my opinion, is what makes money. That's what ends up being money on the market. For one reason, which is, the less obvious reason, is that people can, or the less powerful reason is that people can think about this and can understand it. But I argue that that is even irrelevant. People don't even need to understand it. This is economic reality that forces itself. In other words, if we lived in a world in which people randomly chose their money from all the objects that they find and didn't ever think about this issue of what holds value better, we will still end up in a world in which gold becomes money, simply because everybody who puts their money in other things will witness the value of their wealth disappear. So if you put your money in copper, in oil, in fish, in water, in zinc, nickel, whatever it is, the producers of this thing will make more of it, because you're increasing the demand for it, and so you're increasing the price, and so you're increasing the incentive for the producers to make more of it, and therefore the producers will make more, they will flood the market with it, and the value that you put in it will disappear. And so this is going to destroy the value, the monetary value that you've stored in it, and the only monetary value that will remain will be the one that is stored in the metals that have a high stock to flow ratio. So even if we go around choosing monies randomly for 100 years, at the end of those 100 years, the majority of wealth will be stored in the money that is the hardest to produce, because that's the one that will maintain its value. So historically, this, I think, is the case for why we can understand that gold became money. And then, of course, we had the 20th century, where humanity took a massive hit to its civilizational project, when we decided to give up on, well, we didn't decide, but governments decided that hard money that allows people to store wealth and maintain value into the future is not conducive to their spending plans, and so they forced people effectively to use horrible inflationary national currencies. And if we look at the track record of these national currencies, fiat monies, we see that the best fiat currencies increase at around 5, 6, 7% per year in terms of their supply. And of course, the worst ones will increase at much higher than that. Some of them will increase in their supply by 100 or 200 or even 300% per year. So that, I think, has been massively destructive for humanity, because it has destroyed our ability to save. It's destroyed our ability to provide for the future. And my favorite focus, my hobby horse, is the topic of time preference. By reducing our ability to provide for the future, this basically reverses the process of lowering our time preference and forces us to become more present-oriented and less future-oriented in our approach to these kind of questions, to all questions across life. And I think you see this reflected in all aspects of things throughout the 20th century. So, where Bitcoin comes in is that gold is stoppable by governments. In order to use gold as money, you need to be able to move gold around internationally in order for it to function as money. And as world trade became more and more international, and as global markets became more and more interconnected, trade in gold became reliant on central banks and on governments allowing gold to trade. Effectively, the topic, the concept of the saleability or the liquidity across time, across space of gold, is reliant on governments, and then governments managed to stop gold from trading by confiscating it and by banning people from setting up free market gold-based banks and forcing people to use their inflationary currencies. Where Bitcoin, I think, is really important is that it sidesteps this. It allows us to have gold's hardness and saleability across time and the ability to save and store value into the future. And it also allows us to have a saleability across space that is much higher than gold. We can move Bitcoin across the planet in a couple of hours without needing to resort to any political institutions or any government institutions or any legal institutions. And so, therefore, we have the makings of a free market monetary system, decentralized with no central authority. And it's something that can continue to operate, I think, without governments being able to stop it. And this means that we now have free market competition in money for the first time in a century. And I think that's going to restore the natural order of people always seeking and finding and using the hardest money. In a nutshell, this is my case for Bitcoin.
Thank you very much, Saifedean. That's very useful because I haven't read all of your book, and so this is a very useful sort of summary for me. Can I introduce by sort of introducing myself a little bit as not just an empirical economist? I've also written a textbook on macroeconomics, introductory economics, and sort of put various proposals in papers and other outlets on how to reform the financial system. I once, for instance, during the great financial crisis, said that government should print more money for their population. I was an advocate of the notion that everybody would have an account with the central banks and would get several thousands of dollars as a means of sort of overcoming the problem with liquidity constraints at that time, but also as a means of overcoming some of the inequality. Basically, it was a helicopter money, it's called. So I'm very sympathetic to the Austrian school. I'm not a member, but I certainly buy some of its main tenets, particularly when it comes to prices and markets as a discovery mechanism, complex things. So we're not that far apart, as it were, from our economic ancestry. I would like to ask you some sort of questions about Bitcoin and the market for Bitcoin, but let me first react to what you said. I mean, I talk. But of course, lots of things are scarce. And the ultimate scarce thing is probably land. It can't be made either. And land as a unit of value, and definitely as a store of value, is probably, historically speaking, the main, as it were, form of money as a store of value. But of course, money has two roles, and they don't necessarily need the same type of money. So you have money that has a role as a store of value, and land is like that. Lots of assets are like that. Housing can be like that and is like that in the current day. But you also have means of transactions. And so if we can talk about Bitcoin as an asset, which is the predominant way in which it's used now, or we can talk about it as it were, a means of trade. And as a means of trade, the notion that something needs to be scarce is much more difficult. Land is not used as a means of trade, essentially. Right? It's used as a means of asset, but not as a means of trade. And with as a means of trade, you basically want other characteristics. You don't really want it to be the case that it cannot be further produced. Because it has been remarked by many economists on Bitcoin that if you have something that is basically in fixed supply, so suppose those 20 million odd Bitcoins, but anything else it would go for as well if it's in totally fixed supply. And if trade is increasing, so production is increasing, there's growth, there is more and more demand for the unit by which the trade gets sort of takes place. And so the price of that money itself, as it were, in terms of its value in terms of what you can buy with it, in terms of real goods, increases in principle over time. Now, then you have a problem. You effectively are then in a kind of deflation scenario. And what happens then is that people no longer trade with whatever is their money. They hang on to it because its value will increase tomorrow and in the future. So it stops being used as a unit of trade and starts to be purely an asset. And that means that it's no longer actually useful as this lubricant in terms of trade between people. And that has been one of the criticism of Bitcoin, that it cannot be it basically cannot be a means of exchange if it isn't fixed supply, because then its value will increase as the economy increases. And if it increases, it will become an asset. And we've seen this before in the world. We've seen this when it comes to silver in China. Right? I think I'm not 100% sure of all the details of the story, but I think this is true that in the 19th century, China was still using silver as a means of trade. So, transactions were in silver, but the world economy was growing and the silver price was increasing. And so what happened is that Western foreign agencies bought up all the silver from China because it was just worth more than they had to pay for it in terms of the goods. And effectively, trade became very, very difficult within China itself. And so what has happened in that sense historically over time is that as a unit of value, governments have started to give out money, although you're right, in the 19th century, there were lots of commercial forms of money as well. But governments started to give out money and started to sort of regulate the supply of money, putting in more or less, effectively in order to prevent deflation. Right? Deflation was seen as something that was incredibly negative, because then you get this phenomenon that people hang on to money itself, because money itself then sort of increases in value over time and starts to be an asset, which is then a good bet, as it were, a good investment. And so trade dries up. And so in that sense, there has been a gradual divorce between things that are in totally fixed supply, like gold, and things that are useful as a means of trade, which is, the money that are now given out by central governments. So I think in that sense, Bitcoin has a problem in trying to be both. And I noted that in your book, you have, as it were, Bitcoin there being an ultimate settlement currency, if I can put it like that way, that major financial institutions, central bank would settle their own balances with each other by means of Bitcoin, which is a little bit trade-ish and a little bit a sort of an asset. But I sort of, we can have a discussion about that, but I was also interested in sort of asking you general questions about the Bitcoin market. But I guess this depends a little bit on who's interviewing you, Saifedean. So in that sense, I'm willing to, this is your show. You basically call the shots on the rules here.
No, I think we can have both. We can ask each other questions, but so you've raised quite a bit of points that I'd like to get back to. First of all, the issue of land. Yeah, actually, there aren't many things that increase in supply as little as gold. And land is not a good example, because land's supply can actually increase very quickly if people need it. The vast majority of land on Earth is uninhabited. And it's not on the market, not because there's something wrong with it. It's just we haven't gotten to it. So if there is increased demand for land, as there has always been, as demand for land increases, what happens is people dig further, travel further, build more roads, and access new lands. So this notion that we can't make more land is wrong. We can always keep making more and more land, and we can always increase the supply. So it doesn't have that low elasticity of supply that gold has. And of course, the other major issue with land is that you can't make land is terrible money. You can't move land around, and it's not easy to divide land into small pieces. So you can't give me 3 square inches of your land to pay me for lunch, and I can't then use those 3 square inches of your land to then pay somebody else for the raw materials that I need to make the lunch. It's not divisible, it's not portable, it's not fungible, and it doesn't meet any of the criteria. So there are properties that make something good money, and land doesn't have them. Land is great. People now use land as a store of value because government money is so terrible as a store of value that people have to resort to holding all kinds of other assets as a store of value. Now, secondly, I think the deflation issue is, of course, the biggest and most obvious objection that we keep hearing about Bitcoin. But I think, I disagree with you entirely because there is no. You said that it is a problem that the value of the money increases, but I think that is in no way a problem. That is, in fact, the whole point. People want to hold. People are always looking to make more money and to have more wealth and to have more value. And so, if you tell me that I have a form of money that's going to increase in value over time, then you're not being very convincing by telling me that that's a failure in money. And this dichotomy, I think, the idea that there is a dichotomy in the difference between being a medium of exchange and a store of value, I think is completely false. There is no dichotomy. And in fact, you have to be a good store of value in order to be a good medium of exchange, because anything can be used as a medium of exchange. In other words, um, we could use, tinder sticks. We could use wood. We could use, plastic. We could use pieces of paper. We could use anything and exchange it. Exchanging things is a very, very trivial problem. And with digital invention, in the digital age, all you need is just a signal of moving one thing from another. So, we already have a way of communicating through messaging apps, which allows us to basically communicate signals for free, almost across the world, close to free. So the idea of signaling that I give you one or the other is just a very trivial and cheap problem to solve. The tricky part is how to combine a system of moving value around with an underlying asset that is valuable, that holds its value, where people want to accept. So you can pay me, we can send each other all kinds of different things. But how do you and I agree on one thing that I want to accept as payment from you? You have to give me something that's valuable that I want to keep as payment. And in fact, the whole point of money is that effectively it solves the problem of coincidence of wants, that I take it as a payment so that I can then use it in order to make other payments. And that necessitates that I'm going to store value in it. So I can't use something as a medium of exchange without first storing value in it. And I can't exchange something for something else unless I first store value in it. And whether that value is stored for a day or for an hour or for a week or for a year or for 10 years, it has to be stored in that money. So the really tricky part about what makes money is the store of value. And that's why I think, the idea that deflation is a problem, I think is completely misplaced. And I think the example that you gave is beautifully self-refuting. China on silver was in fact suffering from the exact opposite problem. And there is a chart in my book and in my book, I argue that basically silver was losing its monetary role globally since 1870. And if you look at the price of silver to gold, the gold to silver ratio in 1870, it was about 15 to 1. So 1 ounce of gold could buy you 15 ounces of silver. Today it's closer to 100 to 1. So it's been a continuous decline in the value of silver. And that's the root of the problems of China and India in the late 19th century. They were the last two countries in the world that remained on the silver standard after everybody had moved to the gold standard. And so their problem was not that their money was deflationary. On the contrary, their problem was that their money was inflationary. It was the closest thing that we had ever seen on metallic money to hyperinflation. Obviously, metallic monies are never going to do hyperinflation as well as government money. That's one app that government's money completely excel at. But that was close, and I have the statistics, between 1870 and 1930, when China and India went off the silver standard, their currencies had lost something like 70% of their value compared to gold. That was the problem for China. The problem was that their currency was just constantly losing value, and that foreigners who were on a gold standard could come to China and India and buy up things at a cheap price because people there were witnessing their wealth disappear effectively. And this was the issue. So at that time, the value of gold was going up in real terms and in silver terms. And the countries that were on a gold standard during that period did not have a deflationary problem. This was the golden era of capitalism between 1870 and 1914. 1870, incidentally, was the end of the Franco-Prussian War, and it is a historically important milestone in monetary history, because when the Prussians won the war, they asked the French to pay their indemnity in gold. And before that, Germany was on the silver standard. So when Germany won the war, they asked the French to pay them their indemnity in gold, and then they used that to go on the gold standard. So when Germany switched from silver to gold in 1870, it was the decisive switch away from a world in which we had countries that were on silver and gold. Once Germany, which was the biggest country on silver, or the biggest economy on silver, switched to gold, that was it. That was the end for silver. So then all the smaller countries that were still on silver switched to gold as well, and the value of silver began to collapse. So when all of those countries were on a gold standard at that point, you had the US, Britain, France, Switzerland, Holland, and many of the major economies were already on a gold standard. And then Germany joined them as well. That's when the world witnessed the first truly international monetary standard, where all of the world was on one money, and that money kept on appreciating. And the result of that was really the golden era of capitalism, and it's it's La Belle Époque in French. It's the golden Victorian age in England. It's the Gilded Age in the US. It's the age that gave us the car and the airplane and all of the modern technologies that have shaped our world in the 21st and the 20th century. They came from that period. So the notion that, the fact that the value of the gold was going up was in any way problematic, I think is massively unsupported by the data. And the example of China was an example of what happens when the money was losing its value. And I think the other historical, problem with this idea is that it's and this is kind of the narrative that is taught at economics universities, at economic programs. It's the idea that gold didn't work, and that's why we needed to shift to fiat money. Well, that's not accurate, because actually gold did work, and the shift from gold to fiat money was caused by the fact that governments needed it to finance themselves. So it's not like gold was failing. And it happened during World War I that governments shifted to a fiat monetary system because they needed to finance war. They needed to finance their spending. So it wasn't an economic failure. Later on, we came up with these kind of after-the-fact rationalizations by Keynesian economists that have said, well, gold was failing because of this or that or the other thing. But it's not true. Gold was not failing. The only thing that gold failed to do is finance the senseless, pointless carnage of World War I. And that's not a failure of gold. That's a feature. That's the thing that meant that the 16th, 17th, and 18th century were far more peaceful than the 20th century, and the 19th century were more peaceful than the 20th century, because governments were restricted by how much gold they could collect in taxation for financing their war. But once we removed this restriction on them, then they could go crazy with their spending, and that's what indeed happened.
I clearly need to read up a little bit more on the Chinese silver aspect, but I clearly wasn't also talking about gold, right? I was basically just talking about silver in terms of its value of commodities. My understanding was there was a silver standard, but the currency itself, hence, is something different, right? That was sort of the paper money bandied around. So silver could be bought up, and indeed that sort of has done an impact on the currency, but it's a different notion of what the value is. So gold to silver sort of relativities are sort of neither here nor there. But I did want to come back to the land point, right? Because you did say that land is produced, and it's not. But what is the case, of course, is that land's value is very different from where it is, right? At the top of a mountain, land is worth less than sort of at the bottom of a valley where it's fertile where lots of people live. So land is by definition still scarce and sort of cannot really be produced in sort of significant amounts more. But there is a local value to it, right? And that is, of course, different from a currency that is used for trading, which you like to have the same value everywhere, right? Because otherwise it's not very useful. But as a store of value, land is extremely useful. right? Whether or not it's at the top of the mountain or at the bottom of the valley doesn't matter, right? It's sort of the local production value which pins it down a little bit, but it also has, as it were, in keeping with lots of other things, including Bitcoin, a speculative component, and that's certainly the case, and has been the case when it comes to land in sort of some of the major cities where the price is largely a speculative aspect. But I wanted to start asking you a couple of questions on the Bitcoin phenomenon itself, right? One of the questions I have is, as it were, well, you've already talked about why you think, as it were, economists didn't see it sort of going up and up and up, right? And I've definitely been one of the people who've been surprised. But I think it's fair to say that the mainstream economic community also, as it were, doesn't quite yet sort of have a good handle on how the whole market for Bitcoin is organized. Now, I don't mean the hashtag phenomenon, but I particularly mean the mining phenomenon, right? One of the things that we're unsure of is, well, who the miners are, right? And economists are in that sense a bit skeptical. If they don't know who the miners are, they worry about that. They worry about the organization involved. And so, one of my questions to you is, do you know who the miners are? Would you be able to say, yes, 99% of the miners are these and these and these groups. There's sort of, that and that and that kind of person. Do you have profiles in mind? Do you know the concentration, as it were, the involvement of governments? Is there some sort of sense in which you think you have a handle on who the miners are? And could you, as it were, explain sort of, in a brief way, well, whom we should think of as the miners?
Well, the short answer to this is that it doesn't matter who they are. It's a completely impersonal system in that it doesn't really matter who you have behind it, because it's run in a mechanical way that prevents people from being able to manipulate or control the system, that makes their identity irrelevant. In other words, the metaphor that I like to give for the miners is that they're like um, they're a bit like the janitors in the White House. So who are the janitors who are cleaning the bathrooms in the White House? And if you think that the miners can control Bitcoin, it's a little bit like thinking that the janitors in the White House are going to take over the U.S. government. You can see a sort of scenario where this is likely. So if the janitors don't clean the bathrooms in the White House, then the bathrooms stink, and then you get diseases, and conceivably this could lead to health problems that affect the U.S. leadership, and then the miners can take over. I mean, can you say it's impossible that this will happen? No, you can't. But it's also not going to happen because, the moment that one janitor in the White House doesn't do their job cleaning the bathroom, effectively they have a boss, and that boss fires them. And if the boss is in on the coup attempt, then the boss of the boss will fire them, and then the boss of the boss will fire them. So basically, they exist within a system of economic incentives where it doesn't really matter what they choose to do. Effectively, with Bitcoin, miners are not in charge of the network. They're not in charge of the consensus rules of the network. They're not in charge of deciding what happens on the network. Miners solve the proof of work problem and sell it as a good to the network. And the network, the governance of the network is controlled by the nodes. And so there's a distinction between the nodes and the miners. The nodes are anybody who is part of the network, anybody who becomes anybody who becomes a node on the network downloads the software and then is validating every single transaction, and is validating the blocks that are being provided by the miners with these transactions, and is validating the proof of work solution. So effectively, the miners are just providing a good to the market, where they solve this proof of work and they attach it to the transactions and they give it to the network. If they attach only valid transactions with a valid proof of work, then the block gets merged into the blockchain and it becomes part of the record of transactions. And the network goes on and then we find another block. If they try and mess around by providing an invalid solution to the proof of work problem, or by trying to put in an invalid transaction or trying to change anything in the supply, then all of their blocks just get rejected, so they're no longer part of the network. That's just how it works. So effectively, they have no sovereignty over the network. They have no ability to dictate terms on the network. They are, and they're in a position of weakness because in order to be a miner, you have to expend an enormous amount of resources on building the excuse me, on building the infrastructure that is needed for you to be able to solve that. So miners today, they spend thousands or most likely even millions of dollars to build their facilities in order to produce those blocks and then give the blocks to the Bitcoin network. And they have to abide by the rules of the network. And if they don't abide by the rules of the network, then all of the capital that they have invested goes to waste. And we saw in 2017, and that's something that I mentioned in the book, we saw in 2017 how there was essentially an attempt by miners to try and change the consensus rules of Bitcoin in a way that was more favorable to them. And all that it did was that they ended up creating another fake Bitcoin. And there's thousands of these at this point. And that fake Bitcoin has now, continuously finding new zeros to add on the right side of the decimal point in terms of its price. So it's flatlining and it's discovering new depths. Like you can keep zooming in and it keeps finding new space between it and the x-axis. So it's gone to zero, and it's a fascinating experiment to see how long something can take to truly find zero, to really go to proper, true, complete zero, because you can always keep adding zeros next to the decimal point. So the network's rules are determined by the nodes, by the users of the network, and anybody can run a node. You just need to download software and put it on your computer and run it, and then you decide what the rules are for Bitcoin. And effectively, the rules are sclerotic; they can't be changed. It's a situation where there's consensus around this, and there's a new block that needs to be confirmed every 10 minutes. And if you try and change the rules, you fall off this consensus. It's like a train that's relentlessly running, and you can either hang on to the train as it is, and if you try and say, let's change the direction of the train, all that happens is that you jump off the train and the train continues. So that's kind of been the experience for it. And so that's why the question of who the miners are doesn't matter. The miners are people who have invested a lot of money in solving proof of work problems, and if they solve those proof of work problems correctly, they can get some of that money back and hopefully make a profit for them. And if not, then they just become poor.
Thank you very much. Yes, no, that sort of clarifies a couple of things. But I was actually aware of sort of the hash functions and the sort of the basic way in which Bitcoin works. So I wasn't sort of asking so much in terms of the authority of miners. When it comes to miners, of course, I'm more worried about, well, what are their incentives and what is, as it were, globally productive, what the miners are doing, or is there a loss there somewhere? So I have a particular question in mind there. But I also wanted to ask about the authority aspect. Right? My understanding of the Bitcoin network is that it has changed its protocols, it has changed its rules, and there is a mechanism for, as it were, the consensus to shift. Now, I have noticed in part of your book, but also in what you said last week, that you, as it were, made great play of the notion that, as it were, the rules will never be changed so that there won't be far more Bitcoins in the future. But of course, as it were, trust in that is trust in what a future generation who's not yet born will decide. If there is a mechanism by which they can change their mind, then, as it were, there's never a guarantee as to what a future generation will or will not do, right? So in a way, it's asking us to trust in as it were, almost like social contract across generations. And so if there is a change in protocol possible, then of course, there is nothing to keep future generations from reneging on what the current generations might or might not have in mind. Now, on the miners, I have a particular question, and I don't know whether this has come up before in the Bitcoin community. I have wondered where the energy comes from. So the miners is aware of two main ingredients. There are the computers, and some of them are very much specialized to particular hash functions used in their activities. But it's also, of course, fed by electricity going into the computers. And effectively, it's a conversion of electricity to Bitcoins via this kind of tournament process in which most of the calculations don't get you anything, but the winner gets something. And that, in principle, allows a kind of laundering of stolen energy. So one of my sneaking suspicions, and I have no proof of this whatsoever, but I wondered whether you do, is that much of the energy put into the mining, and the mining is, as you say, a vital component. We call them the cleaners, but they are basically the administrators of the whole system. Is that what they're doing is they're either stealing from their country, their employer, right? Or from perhaps whole regions, the energy that they then convert via their mining activity into what is private wealth. So, as it were, public electricity, or at least electricity that's not theirs, gets converted into something that's something valuable for them. And I wondered whether there was any study done on this, whether that's a prevalent thing, whether there's some sort of percentage guess. I don't know. A quick search didn't tell me anything, but maybe that's because I don't know the keywords to look for. So I
Yeah.
have a worry about the miners, and I have a worry about the authority system of Bitcoin. Can you illuminate?
Okay. So first of all, in terms of the changing the protocol, I think there's an important distinction here between what is called a soft fork and a hard fork, and effectively you don't have to trust in anybody because you download the software on your computer and then you run the software that you want according to the consensus rules that you like, and then nobody can change the software that's on your computer. So nobody can force you to use another different kind of software. Nobody can force you to change your Bitcoin. So you don't really have to trust in anything else because there's no, I think this is really the key thing about Bitcoin, and it's the main difference between Bitcoin and all the altcoins, all the other digital currencies, which is that Bitcoin is made up purely of users. It has no admins. There are no admins in Bitcoin, but there are admins in all the other digital currencies. It's all the other digital currencies, as well as basically every other kind of software or computer network. It does have admins. There's an admin to Amazon. If you have an account on Amazon, if you misuse it, they can kick you out, and they can introduce an upgrade to Amazon that changes the fees or changes your ability to list things, and you have no choice about that. It's the same is true for Facebook or for Apple or for Netflix or for Twitter. All of these things, there is an admin in charge, and you are a user. But with Bitcoin, there's no admin. You are the admin. You decide what code you want to run. Now, there have been changes to the code, but the changes that have been done are still not the key thing about Bitcoin is that you can make changes that your changes can be accepted as long as they don't kick people off the network. So the remarkable thing about Bitcoin, which separates it from all the other currencies, is that you could run the Bitcoin software that was used to mine the first block of Bitcoin, which was mined on January 3rd, 2009. You could run it today. It's going to be slow. It's going to be buggy. It's been optimized and improved in all kinds of ways, but it's still compatible with the network today. And that's an enormous difference. There's one bug that you have to fix with one problem with the coding, but it's still compatible with the code as it is today. So basically, you can think of all of the changes that have been done as being cosmetic changes to superficial properties of the code to optimize it and to make it run better. But they are not changes that have affected the consensus parameters. And the important consensus parameters are the ones whereby if you change them in your code, you would leave the network, or you would have another coin basically. And so whenever somebody has tried to introduce changes that would make your software incompatible with their software, we end up with two coins, and we end up with Bitcoin, and they end up with another coin. So that's why we have many thousands of, well, maybe not thousands, there's dozens or maybe hundreds of Bitcoin forks that have effectively gone to zero, because all of these people tried to change the code of Bitcoin. And then, they're like people who are, again, on a train, and they thought, let's jump from the train, and then the train will have to turn around to pick us up and change direction. No, the train keeps going. You just fall on the floor into a muddy, bloody puddle, and that's the case. So the train is still on the same tracks and on the same consensus parameters. There's still the same supply, the same block size. The most important parameters of the network are still there, and nobody can force you to change them. So effectively, Bitcoin has selected for the kind of people who have used Bitcoin have all kind of accepted this idea that, money and monetary systems are not something that I choose to use myself and I choose to make the rules for. If you get into Bitcoin, you accept the fact of money as rules and not rulers. Money is not something for rulers, for people to be able to dictate and control. Money is a set of rules that everybody plays by, and if everybody plays by these, then we all win. That's that's the basic idea of how Bitcoin has been changed. Now, in terms of mining, um, this is a question. The answer is very simple. Economics value is subjective, and so is the use of energy productive in Bitcoin? Well, is your use of energy to have heating in your house productive? Is your use of energy to have a laptop productive? Is your use of energy in driving a car, getting on an airplane and flying to go to work or go to conferences, is that a productive use of energy? What decides what's a productive or what's an unproductive use of energy? The only way of deciding such questions is very simple. It's subjective. If you pay for it, then you clearly value it more than the alternative. So if you have $100 and you decide that you want to buy an airline ticket to travel from one country to another with that $100, well, what that tells us is that you paid for the fuel to make that flight happen, and you value that trip more than that flight. It's very simple. So now, currently, Bitcoin consumes enormous amounts of energy. I mean, it consumes something like 0.1% of the world's energy consumption, most likely. It consumes more than small countries. And that's a feature, that's not a bug. So that's not something that can be stolen. You can't just get away with stealing it. So historically, I think initially in the early parts of the Bitcoin network, yes, there was a lot of mining that was done where, let's say, somebody is at a university, they plug in their computer at the university in their office where they're not paying electricity bills, which incidentally is probably the stupidest mistake of my life to not do that at a certain point, to plug in computers into the university network. But let's not cry over spilled milk now. So I think, yeah, in the early years, a lot of people were doing things like this and mined Bitcoin at a very low cost. But with time, now, Bitcoin mining is a massive industry. So you have mining facilities that consume enormous quantities of energy that involve very large investments. People, multi-million dollar companies are investing in Bitcoin and in Bitcoin mining. So it's an enormous amount of resources that goes into it, but it's people are willingly paying for it. So people are willingly paying to consume that energy, and they are being compensated by the Bitcoin network because Bitcoin users are willingly paying for the Bitcoin. So when you go and you buy Bitcoin, you're paying for the existing holders of Bitcoin to give you Bitcoin, or you're paying for new coins that are being mined by the miners. In all cases, some of that money is going back to the miners, and they're profiting from this sale, and that's what making Bitcoin mining profitable. So the question is, you can't just say, all right, well, is this good or is this bad? The question is, what is the value that people are seeing in it? Why are people spending so much money in it? Why, we can't just say, well, is international aviation a waste or not? No, it's clearly people are willingly paying for all of these airplanes to fly all over the world. So the question is, what value do they see in it? And I think there's an enormous value to be seen in Bitcoin. And in my next book, The Fiat Standard, which is going to be out in a couple of weeks, I discuss in detail what I do a cost benefit analysis for fiat money and a cost benefit analysis for Bitcoin. And when you understand that Bitcoin is an alternative and an upgrade to the fiat monetary system, then yeah, it's definitely worth every penny that people spend on it. Fiat money's supply increases annually at a weighted average of around 14%. So your average fiat user is witnessing their currency increase in value at 14% every year. And that's just pure grift. That's pure theft. It's There's no reason for any money supply to ever increase, but the fiat money increases at 14%, and so it's taken away about 14% of the value of the money every year from you. So if you're able to buy Bitcoin and hold Bitcoin instead, you're buying something that doesn't have inflation. It's resisting inflation. So that's what Bitcoin is providing us. It's building a monetary network that resists inflation. It's the most advanced technology for countering Keynesians. It's the most Keynesian proof system. And yes, if you have a cheaper way of making money that is Keynesian proof, then I promise you, Bitcoin users, the majority of them would definitely go along. It would be more economical than Bitcoin and it would be better. But this is the cheapest way that we've found of building Keynes proof money. It's money that doesn't steal from you. And so, do you think there is demand for that? Do you think people don't like to get stolen from? I think so. I used to live in Lebanon until very recently, and I would have been a victim of the government's hyperinflation if I had had my money in the banking system. So, do I think that the electricity that Bitcoin network has consumed has been wasteful? Absolutely not. In fact, I can name many, 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 many things in the world that are far more wasteful than the electricity that goes on Bitcoin. I think, for instance, the entire entertainment industry uh, is completely superfluous. Why should we have movies? Why should we have music? I think, before we shut down Bitcoin, let's shut down movies and music completely. No more production of movies and music, no more streaming, no more CDs, no more videos. I think, if you obviously, I'm just being facetious here, but it's not my call. That's the whole point. There is no central planner out there who gets to decide who gets to spend their energy on what. People make their own choices about where they want to spend their resources.
Um, Let me disagree with you on several points of what you there said, but I was happy to get, as it were, the actual explanation of who the miners were. So you do have some idea of who the miners were, and I think a lot of people would sort of, appreciate, as it were, some sort of breakdown as to, generally speaking, where the miners are, what their concentration was. I read that
Well, I mean,
somewhere.
I can give you a general idea if you want. I guess my answer was it doesn't matter, but we do have some idea. Up until May this year, about 60% roughly of mining activity was in China. And now approximately 0% is in China. In May, China announced that they want to ban mining. And so we witnessed the hash power of the network decline by about 50-60% over the space of a few weeks. So it used to be in China, and this was kind of the major talking point of a lot of Bitcoin haters, which is it's all controlled by China and China controls it. China owns the miners, and one day China is going to change the rules. And unfortunately for them, things don't work out well for people who hate Bitcoin. And now they've run out of their ammunition because now China has kicked them all out. So they're not in China. I think now the biggest concentration is probably in the US. The majority of mining is not in the US. I don't think it's a majority, but I think it's the plurality. It's the biggest single country. And then it's distributed all over the world. And primarily, the thing about Bitcoin mining is that it goes this is the really, really powerful thing about Bitcoin energy mining, which I think is going to truly revolutionize energy markets around the world. Bitcoin is the first use of energy that is location independent. Bitcoin will buy energy from you from anywhere on the planet. So all other uses of energy, they're kind of static because moving energy is very expensive. If you want to produce electricity and put it on wires, it costs a lot. You can't move electricity more than 500 miles, I think, and then it just loses. It's not worth it. And moving gasoline is expensive, and moving oil is expensive, and moving gas is expensive. All forms of energy, if you want to move them, they involve massive costs. But Bitcoin effectively has very, very, very little cost of moving energy because you can mine the Bitcoin wherever the energy is, and then you sell it through the internet connection. So all you need to do is just link to an internet satellite connection in the most remote area of anywhere. and you're able to sell the Bitcoin to the network. So therefore, naturally, what this means is that all energy production that is close to population centers, that's where the energy is going to be relatively expensive. The average cost of electricity for the user in the world is around 14 cents per kilowatt hour. So 14, for 14 cents, it's easy to get energy for 14 cents most places in the world. So if you tried to mine Bitcoin with energy that is 14 cents, if you were connected to a grid in your local city next to the power plant, you're paying 14 cents per kilowatt hour. But the other Bitcoin miners they can mine electricity that costs them 1 cent per kilowatt hour or 2 cents per kilowatt hour, because they can go mine next to a hydroelectric dam in the middle of nowhere with a lot of energy that goes nowhere. They can set up mining facilities on a volcano in the middle of nowhere where you can't use that energy for anything else. But you can set up mining there, and then you're mining at 1 or 2 or 3 or 4 cents per kilowatt hour, and because of the way that Bitcoin mining works, Bitcoin mining is extremely competitive. The miners that have to pay a high electricity price, they're driven out of the market, and the market is always kicking out the least efficient miners and only keeping the strongest. So the cost of mining on Bitcoin, if you want to be profitable, from what I understand in looking at the mining industry, it's usually going to be something close to like 5 cents per kilowatt hour. If you want to guarantee being profitable for the long run, you want to have mining at around 5, 6 cents per kilowatt hour or so. If you're mining at a price higher than that, you're not going to make it. You're going to lose out. You're not going to be profitable, because mining difficulty always goes up in order to price out the least efficient. Um, so the majority of mining is held in places where it's isolated and stranded. We have, for instance, methane flare gas is used. In oil fields, they burn a lot of methane. A lot of that methane is now being used for mining Bitcoin. Abandoned oil fields, where it's no longer economical to take out the oil and sell it, you can use that to mine Bitcoin, because you don't need to ship the oil, so you save on the shipping cost, and you just run the oil domestically and make the and make the and mine the blocks.
Thanks. I want to make a couple of points in regards to the various things you've said. Right? The first thing you said that effectively, yes, there is a means for changing the protocol in Bitcoin, and that has happened, as you said. You call them, as it were, cosmetic changes and bugs, and as it were, thousands of, as it were, failed attempts at takeovers of Bitcoin. But of course, thousands of failed attempts also mean that, as it were, there is a method to, as it were, change the fundamental rules of Bitcoin, and they haven't, as it were, it hadn't worked so far. But you are then betting on a future generations in which, as it were, those attacks will not work, as more and more would hinge on it. And that is, of course, a trust in future generations. Then I want to make a point about the 5 cents per kilowatt hour. As you say, that is not with the normal price. And so one is down to niche notions of energy. And I totally agree with you. Energy transport is relatively expensive. The rule of thumb I have in my head is that every 1,000 kilometers of electricity movement, we lose about 7%, which starts to be an awful lot, right? As soon as we're talking the large distances between continents, for instance, which was exactly my point. This finds, as it were, stolen energy anywhere around the world, if that is an issue, right? And so one study one could do is, okay, how much Bitcoin is mined within places where the costs are more than 5 cents per kilowatt, and then there's a strong suspicion that that basically happens with other people's energy, like. But I want to come back to this notion of that Bitcoin is worth mining because, well, they're spending good resources on it, and so they must know what they're doing, and so it's valuable, which is, in a way, sort of an old-style economic notion, but that is, of course, goes against this notion of the tournament competition winner aspect of Bitcoin, right? In a way, there are two ways to see this, right? The ultimate value on the well-being guy would be in terms of how much society as a whole is benefited by these activities. And of course, the mining of Bitcoins can be seen as a tournament. As you said yourself, it's very competitive. And so, as it were, the total value of the extra Bitcoin is independent of who gets it. Right? So in principle, it's like a tournament. Everybody puts in effort, and that is in order to get a prize, but the value of the prize itself is fixed. So all that effort basically should be seen as sort of lost effort, right? It is like a tournament in which everybody spends a dollar. Let's say 1,000 people spend a dollar, so that one gets a prize that is worth $1,000. But the net loss in this case is $1,000 worth of energy. So I see as it were, the total energy spent on Bitcoin as total loss, basically, of the effort. Now, individually, it makes sense. It's valuable for them because they get a prize. But that prize, which happens to be equal to the total amount of value of the additional Bitcoins being created by the mining process, is effectively totally a zero-sum game, right, from the point of view of the miners. Whatever one person loses, it's what the others have lost because they've entered the competition. And so because there's no value in the competition itself, it's not like, as it were, we're watching a wrestling match whereby we get enjoyment from, as it were, the strength of the fight. This is purely a commercial activity. So effectively, that is not, as it were, well, they're paying money, so it's worth something. No, it's a tournament. So they're putting in effort, which is individually sensible, but not collectively sensible. But I want to go meta on that, which is this notion of, well, Bitcoin in that sense is like money. It is the asset aspect of money, right? In terms of a means of exchange, it's not been very successful so far. Since the inception of Bitcoin, there have been many other PayPal type financial innovations set up, which have grown much more as a unit of exchange. So its success is much more as a store of value. But all money, both the exchange of trade and the store of value, is effectively a kind of a lubricant for what you might think of as time trade. If I trade with you actual physical goods, we're trading the result of our own time investments in sort of the recent past. If I'm storing value and sell this later in life because I stored it when I was young, then I'm sort of trading with myself over decades, but I'm doing that via others. So really, I'm trading huge amounts of time with others and with myself over time. And money, in that sense, is just the lubricant which allows these time trades. And as such, it has a social and economic role, right? And allows for economic growth. Now, in that sense, money has a value. And so if I were to put a value on Bitcoin, it would have to be because it is a superior means of exchange and a superior means as a unit of asset. But in order to be convinced about that, I don't want to hear about, even as it were, the technology for Bitcoin itself. It is more, well, does this indeed allow better trades? Does this allow me trades that I otherwise would not see? Are they quicker? Do they allow people to trade who otherwise wouldn't be trading? Does this mean I'm avoiding inefficiencies which are there in the alternative money markets? So that has to hinge on an argument whereby one says, well, the other means of money are basically causing problems that Bitcoin does not. And the same, of course, for assets, which is very much more where Bitcoin at the moment has, as it were, a market. In what way is it a superior asset? In the sense that the other asset markets have problems, have inefficiencies, are basically not good means of exchanging time. And I ask myself that question, and when it comes to, as it were, exchange of sort of direct trades, Bitcoin is not used that much as an asset thing. It's used more, but I answer myself, I don't know. I don't know in what way, as an asset, Bitcoin functions better or worse. It's basically like, expensive paintings. I mean, some people seem to like it, and it is used, and sort of, value in that sense is in the eye of the beholder. It is, in that sense, just a social norm as to whether or not it's worth something. But it convinced me that it's a better asset, that it is where makes that time exchange better, because that is what money is. It's basically just a lubricant for time exchange, right? I mean, in that sense, the language of putting value in money is false. Right? Ultimate value always comes from time. And so it is just a societal gimmick at the end of the day.
Yeah, I think I mean I obviously disagree with this, and I think the best way that I would express this is in the fiat standard. When I run the cost benefit analysis on fiat and the cost benefit analysis on Bitcoin, I look at the total amount of money that has been spent by Bitcoin miners in the 12 years in which Bitcoin has been operational. So basically, Bitcoin mining is a highly efficient market where you can't keep mining if you're losing money. If we assume that Bitcoin miners' cost is equal to the rewards that they've made, They probably made a little bit more, a little bit less. Some have made money, some have lost money. But if we take it to be assumed that, then we've seen miners spend about $30 billion on Bitcoin in terms of electricity and equipment over the past 12 years. And this has now given us a monetary asset that's worth $1.2 trillion. So this is really the best kind of direct refutation of the idea that it is zero-sum game. It's not zero-sum game. We've put in $30 billion of electricity and computers, and what we've gotten out of it is $1.2 trillion held by millions of people all over the world. $1.2 trillion is bigger than basically all national currencies except for a handful or two handfuls. Something like the Bitcoin is around maybe the 10th biggest currency in the world at this point. So Bitcoin's already beaten all the national currencies, but a few in terms of the value that is held for it. So this is, of course, this is value that's being held by people, and it's extremely valuable for people, and it's been massively life-changing for many people, including me. I would have been stuck with hyperinflationary Lebanese shitcoins had it not been for Bitcoin. So, this is for me, this is why this can kind of be a little bit frustrating when people tell me, well, they don't see the value. It's a little bit like, you were on a sinking boat and you just got off and you survived thanks to a lifeboat, and you come on shore, and the people on shore tell you, you know what? I think this lifeboat of yours consumes too much fuel. We need to stop. We need to ban lifeboats. I'm not so sure about lifeboats. Lifeboats are the reason that I'm not in the bottom of the ocean at this point. So and the value that comes from it. The value of the Bitcoin today on the market value is about $1.2 trillion. We know for a fact that the people holding the Bitcoin value it as more than that. Otherwise, they would be selling. So the valuation that people attach to the Bitcoin is clearly higher than that. So 1.2 is like a minimum of the valuation. So we've already done something like 4,000% appreciation in terms of just the input and output. So it's not a zero-sum game, because it's not like you can store, value is not, value is subjective. It's not the labor theory of value. It's not like value is just this juice that gets put into Bitcoin. And so if you put $30 billion of equipment and electricity in order to make the current Bitcoins, we don't end up with $30 billion. On the contrary, if we build a form of money that resists inflation and that resists confiscation, that can travel internationally, then that's a form of money that will appreciate further beyond that. So people will make a profit, and people who have bought Bitcoin have made a profit, and the miners have made more profit. And that gap between 1.2 trillion and 30 billion effectively is 1.2 trillion, because the 30 billion is a rounding error next to the 1.2 trillion. That gap is essentially the value added of Bitcoin. This is the economic surplus that Bitcoin has given the world, because it has given people the ability to store value in it. And this is where, when you say, is it used for trades? Currently, I think it's used for the most important trade, which is your trades with your future self. People save money in Bitcoin today, and then they're able to spend it next year. And because it's such a superior monetary asset, they're able to spend more next year, because the value of the money that they invest in is going up. So, and then when it comes to individual trades of people trading and buying, again, I go back to the original point that we made. We can have a monetary system built on sticks and stones or anything. The real value lies in the fact that if we can make that thing hold on to its value, so that then people can trust it and rely on it. And in this regard, you can see that what's been happening with Bitcoin right now is basically the tip of the iceberg. Bitcoin has gone from zero to $1.2 trillion in 10 years as people are beginning to understand it and discover it. But imagine what happens when people realize that, when all of these kind of objections of, well, it's going to get hacked and the miners control it and the miners will shut it down. The more you realize, the more you learn, the more you realize that these are unfounded and largely the more you study, the more you see that they're not really a threat. And, the more realistic way to look at it is to compare these threats to the threats that face you with national currencies. So on the Bitcoin, you download the software and you verify it yourself, and you know how many coins there are. And you can start thinking about all these hypothetical attack vectors that could maybe one day change it, but nobody can force you to change the software on your machine. But you know what? National currencies, you don't get to download the software. You are a user, and there are admins. The admins, as they have done many, many, many times, as they do always at all times, and every morning they wake up and they have a new reason why they need to make more currency for you. Every morning they wake up and they make more. And you have no idea how much they make. They've stopped even, many of them stopped even publishing statistics about how much of their currency is out there. And they just continuously make more and hand it out to people more. And you have no choice and no say in the matter. So I think we can once this becomes more and more apparent, we're going to see even more and more value flow into Bitcoin. And this is what we're seeing right now. You know, we're still at a point where Bitcoin is used by maybe 100%, 100 million people around the world. I think that's probably somewhere in that range of the number of people that are using Bitcoin. But you know, the only ones that really need Bitcoin are people who care about the future, and I think that's a market of somewhere around 7 to 8 billion people. So there's enormous upside potential, and what we're witnessing is just simply this slow realization of the market, or the individuals who are on the market coming to this realization and internalizing it and selling their inferior 20th century manual currencies for superior 21st century automated electric money.
Well, we will see about that, but it's I definitely sort of welcome, as it were, innovation in the monetary sphere. Just basically as sort of an economic scientist, you know, just well, what's going to happen? And I will say that 30 billion as the cost for a mass societal experiment is not much. So I do see the 30 billion as a total waste, because the zero sum, of course, holds for the miners, right? Their activities are zero sum in the sense that they are playing a tournament against each other, whereby, as you say yourself, basically the profits they make is basically zero, which was my point. This is a tournament. They're paying for a prize, and fighting for the prize means that they put in just about as much effort as they get out in total in the prize. That's in fact an old economic theory. I think it's Lazier who's associated with it. So that's exactly what we expect. In that sense, the market seems to be functioning very well. And for that to be true, by the way, it doesn't have to be the case that, as it were, that there are people who steal electricity. What matters is whether the last person who is still competing is, as it were, paying the fair price for electricity. If not, if the last person, so the marginal one, is a stealer of electricity, then the inputs can be bigger than the price. So if your data tells you that where the net profit is zero, that tells us that at the margin, it's not a stealer of electricity anymore, which is an interesting, as it were, application of economic theory, I would say. But the $1.2 trillion, I disagree with the notion that that is, as it were, value from a societal perspective. I can totally understand that that is value from the point of view of those who have it, and I congratulate you, Saifedean, and I congratulate everybody else who sort of, you know, won, as it were, in this particular investment of theirs. But of course, simply by using the word dollar, you are effectively in that way assigning the value to something in the sense that the rest of society still sort of sees value, which is in the monetary unit that is most used, which is dollars. And what do dollars represent? Dollars are in fact just a representation of time investments and times of others. So they are a call on time of others. And the key thing about time of others in that sense, that is a totally fixed commodity. We cannot create more time. Money is just the lubricant. So in that sense, the $1.2 trillion is a pure transfer. So it's great for the people who sort of, you know, managed to effectuate that transfer. Great for them. It's not good, of course, for the rest, as it were, whose own money has lost the same call on time that represents. But from a societal perspective as a whole, you know, money itself is zero game, right? Zero sum, right? So the existence of money is very important because it allows these time trades, but it's not in itself of social societal value. You know, it's just as it were the unit of accounting. And the unit of accounting can be moved up and down between people and institutions, but that doesn't mean that, as it were, that more ultimate value is created. And I happen to be a well-being guy, so I do talk about ultimate value, and that is well-being of society. That has to do with how long people live and how happy their lives are. And money, in that sense, is a means of increasing that and increasing that over time. But it's not itself the unit via which to keep ultimate score. So the $1.2 trillion in that sense, it's basically just a transfer. So, as calling rights on time happen. Um, so,
Can I just can I just comment on this point on the idea that it is a transfer? I don't think that is the case because this is a better technology. We had a very wasteful technology for money, which is government money, which is constantly leaking value, which is constantly destroying economic value in two ways. In one way, which in which it is it is allowing parasites, which is governments and their attendant paraphernalia, to take the value that is produced by productive human beings on the one hand, and then on the second hand, it's disincentivizing people from being productive human beings and incentivizing them to be parasites, because being productive has a very high tax on it, whereas being a parasite allows you to benefit from that tax. So Bitcoin is changing that, in that it's allowing many people to exit the parasitic arrangement and allowing many people to hold their value in wealth that is parasite proof, basically, and therefore encouraging a lot more people to become more productive. And you see this if you look at the Bitcoin community. If you go on Twitter and you look at Bitcoiners, I think that the stories that you hear, once people have this idea where, oh look, I can now save my money for the future, and I can with very, very good certainty expect that in 5 years' time my money is going to be worth more than today. It's amazing how a lot of things in your life fall into place, because now you can see yourself in 5 years from now, and you can provide for yourself from 5 years from now, in 5 years from now. And so then 5 years later, 5 years later is something that matters, and so your time preference drops and you start working more and you start being productive more. And I think we see this very commonly. And so I don't agree that it is a pure transfer. I think this is just a far more efficient technology, because it's taking money away from essentially the parasitic institution of fiat money, which has been massively draining of society's wealth. It's been, we've had countless hyperinflations. We've had very high inflation in many, many countries, most of the world. And and then on the issue of whether we count things in terms of Bitcoin, in terms of dollars, I think this is kind of transitory, to use a favorite phrase of the fiaters. This is kind of transitory while we talk to fiat people, where we need to express things in in dollar terms. But in Bitcoin terms, Bitcoin is the ultimate unit of measurement of everything, because there's only going to be 21 million Bitcoin, and one Bitcoin is always going to be 1/21 million Bitcoin of the total supply of Bitcoin. So everything is going to be measured against Bitcoin, because Bitcoin is the first constant in economics. It's the first time that we have something whose supply is completely fixed. It can't be changed. We only have 21 million. And in reality, the way that we start to think after a few years into Bitcoin is you start measuring everything in satoshis, or sats. So currently $1 is worth around 1,500 satoshis. So the dollar has gone from being worth 100 billion satoshis to being worth 1,500 satoshis. And effectively, in this discussion, you're taking the side that the asset that has gone from 100 billion to 1,500 has bottomed at 1,500 and is not going to decline further. This trend is going to stop right here, from 100 billion to 1,500, and then, this is the line in the sand that we're going to draw, and then Bitcoin is not going to grow any further. I think when you think about it this way, Bitcoin is a superior monetary system in any kind of theoretical way, because its supply is fixed, it can't be expanded, and its value keeps going up, so it attracts more and more people. And all of its competitors, the people in charge of their competitors, aren't even aware of the kind of competition. Most economists, as you were saying, they think that value of money going up is a bad thing, so they're trying to win the competition by devaluing their currencies further. Central banks are up, they're they're up against an enemy and they're shooting themselves. They're pointing their guns at their own money, because they think money is something that they can just keep locked in, because we have a country and we get to put the pieces of dead people on our pieces of the pictures of dead people on paper, so people will always have to use our money. But people don't always have to use your money. People are going to snap out of it and they're going to move to the better, harder money, and the harder money is going to appreciate, and the easier money is going to the value?
I would like to say some things about that because I think the first part of your answer is the discussion we should have, which is Bitcoin proving a more efficient unit of trade over time for people, even if that is just within themselves, which is hence the asset notion of Bitcoin. And I think that empirical evidence in that direction, if it is true that there are many people in this world in all kinds of countries who cannot well trade with themselves for long periods of time, and if Bitcoin allows them to do that, whereas whatever local circumstances are that don't allow them to do that, then allows them to make better choices because they then suddenly can, for instance, save. And that means that they suddenly get an incentive to save and they suddenly get an incentive to be more productive. I think that would make a very strong case for Bitcoin. So in that sense, the empirics in that would be something I'd encourage you on. And please let me know, as it were, how solid that kind of research is. But I wanted to disagree on one thing, the fundamental value of life. I think there is a good test for seeing whether or not you really think something is the fundamental value of life. Imagine yourself at the end of your life talking to your grandchildren. And I imagine this, right? And there are, has your life been good? And I think one bad answer is, oh, yes, I published great papers. I think that's a very bad answer. And nobody believes that that's what life is about. I think is it, oh, yes, I handled many Satoshis. I'm worth so many Bitcoin. I think that's a pretty lousy answer as well. But if you said, well, I've led a happy life, a long and happy life, yeah, that would be an answer that I believe. And the same goes for what you'd want for your grandchildren. Do you want for your grandchildren lots of Satoshis, lots of Bitcoins, or do you want for them to have a happy, long life? And I think the realistic answer is the second one. And so, no, Bitcoin is not the ultimate value of life. It doesn't matter whether there's a fixed amount of them. It is a lubricant. It is a means to something else. And the something else in my book is, as it were, the well-being of a population as individuals. That is the ultimate value. And as it were, in that sense, Bitcoin is just a means to an end. And as all money, in that sense, is means to an end. And in that sense, it is just a transfer from one type of money to another that allows you to say that Bitcoin at the moment, as it were, has a dollar market value of 1.2 trillion. But I do think that one of the interesting discussions that came out of your book is whether or not we should think of governments as good or bad, and as Bitcoin as a kind of a disruptive technology in whether it's good or bad. I find your book in that sense is a bit. It goes in two directions, right? You make the argument, which I sort of have some sympathy with, definitely in the last couple of years, that governments have become too unaccountable, and that there are, as were influences on governments which have become unaccountable, and that is a serious problem, and that I would like to see breakups of part of that power, right? And you see Bitcoin as having a role in that. But nevertheless, in your book, you end up saying, well, I'd like to see Bitcoin to be the unit of value to make final settlements between major financial institutions, between these central banks, which is then seeing Bitcoin as helping these central banks, right? Being, as it were, the unit that they accept. So as it were, you both reject the authority of central governments and then sort of say, well, Bitcoin's ultimate aim is to help it, to become, as it were, part of that. So I wanted to have a discussion as to whether or not in the long arm of history, government should be seen as bad or good. And I think in the long arm of history, it's good. But in the short arm of history, we're now going through a period in which it has bad elements. But there is a schizophrenic element I found in your book as to whether or not you think of governments really as bad or good, because Bitcoin is both disruptor and sort of enabler of governments and financial institutions in your book. So did I either misread that, or do you have, as it were, different central and financial authorities in mind when you talk about a future in which Bitcoin starts to play a major supportive role in their interactions?
Okay, well, first, let me get back to your first point on the empirical aspect. As you can see this screen, I posted this poll on my Twitter, a two-part poll for anyone who has held Bitcoin for more than a year. Question one is, before first buying Bitcoin, the total percentage of my income that went to saving or investment was, and then the four options are under 10%, 10% to 25%, 25% to 50%, and over 50%. And then question two is, after at least a year of holding Bitcoin, the total percentage of my income that goes to saving or investment is, again, the same options. So what do we see here? We see that before Bitcoin, 47.9% of people saved or invested under 10% of their income. After Bitcoin, that went down to 11.3%. But for 10 to 25%, it was 24.5, and it stayed exactly at 24.5. So we didn't witness a change in that fraction of the population. But then in the third segment, which is 25 to 50%, 12.6% went up to 23.6%. And then in the final section, which is over 50%, we had 15% of people saving over 50% before Bitcoin. And then after Bitcoin, people started saving over 50%. 40.6% of people started saving. So we witness a drop of 36% in the under 10%, and an increase of 25% in the over 50%, and an increase of about 10% in the 25 to 50%. So I think this is, and it's a sample of about 4,000 voters, which I think is not nothing. And you know, my kind of audience on Bitcoin Twitter is arguably representative of Bitcoiners, but arguably slightly biased by the fact that they've probably read my book and thought about the questions of savings and time preference and all of that stuff. And so they've been influenced by my kind of propaganda on this, perhaps, which has skewed the results. But I still don't think it's just entirely that these people follow me on Twitter. I think this is something that you see and you hear about many Bitcoiners. And it's something that I've written about in my forthcoming textbook of economics, Principles of Economics. There's a chapter on time preference. And I argue in that chapter that I think the hardness of money is very instrumental in the time preference of individuals, because I think individuals' best way of providing for the future is money. Money is your best way of saving for the future. All other kinds of saving in other assets involve large friction, because they don't hold on to their value as well, and they're not as liquid. But money is the most liquid thing, and so if you're able to save for the future, and you're able to save very well, and you start prioritizing the future, that lowers your time preference, that makes you think more about the future. But if you take away people's money, if you take away good money from people, which is what we see in inflation and what we see more starkly in hyperinflation, when you see, you know, if you read books about hyperinflation, say for instance, When Money Dies is a book about Zimbabwe, or Adam Ferguson's book on Weimar Germany, I forget the exact name of the book, it's escaping me now. It's When Money Dies, yeah, yeah. Yes, When Money Dies, that's the one. Oh, the one on Zimbabwe is When Money Destroys Nation. It's another one by Russ Lamberti and Phil Haslam. And, you know, if you hear stories from Venezuela or Lebanon today, time preference is rising massively. People's time preferences are increasing all the time because they have no way of providing for the future. So the concern becomes about the present. You are willing to risk getting into trouble because you need to put food on your table today. And so crime increases, and all kinds of other high time preference behavior will also increase. And I think Bitcoin is, and this is where really, I think Bitcoin is far more than just, you know, people being able to get rich. I think the implications of people being able to keep their money after a century of central bank pillaging of humanity is going to be enormous. I think we've normalized the fact that everybody lives in this world where your central bank is constantly pillaging you every year, and we just think that this is what's normal. But we have no idea what the world's going to look like once everybody can keep the fruits of their labor, which I think really is going to be massively different. So when you talk about, you know, what makes a good life, it's not about the ability to hold on to a lot of Bitcoin. It's about the ability to keep the fruits of your labor, and that's what Bitcoin keeps. That's what Bitcoin allows you. So it's not that, you know, I scored the high score in the game of Bitcoin by being able to hold a lot of satoshis. It's about the fact that by holding satoshis, I was free from this blood-sucking parasite that is modern central banking and the modern nation state. Which brings me to your next question on whether the state is good or bad. I mean, I think the way that I understand good and bad is around the question of consent versus coercion. So, for me, anything that is voluntary, anybody participating in something voluntary, is good for them. If you choose to take part in a football game, then football's good for you. Otherwise, you wouldn't be playing football. If you choose to do something voluntarily, you value your investment of time or resources into it better. So, in this regard, for me, this is why I view myself as an anarchist. Government is an institution that relies on coercion, not consent. Government is financed by coercion. Everything that it has is stolen by taxes at gunpoint. If you don't want to pay taxes, you go to jail. It forces you to use its money by coercion, by preventing alternatives, and by monopolizing the banking system. And therefore, I don't see any redeeming qualities in those institutions. If you ask me about my personal opinion on them, I don't see redeeming qualities in the state. And I think the world would be better without coercion. And I think it's very difficult to argue this. For me, it's it's similar to rape or murder. Yeah, if it was good, you wouldn't need to rob people for it. If a government was doing something good, people would voluntarily pay for it. And this is kind of what I think that would happen in a free market, in a society in which people were able to have free money, and in which government couldn't just rape and pillage everybody's resources in order to finance its own operations and its educational and brainwashing system. I think people would keep their wealth, and whatever emerges like a government, there will be collective groups and institutions, but they would all be voluntary. So they don't have to all be for profit. It's not that everything has to be for profit. It's that everything has to be voluntary. So maybe people will have neighborhood associations for security and night watching, but they'll be voluntary. And if you want to take part, you pay, and or you volunteer your time, or you get paid to take part in them. Everybody involved is voluntary, and this is what I would see as being a good part. Now, to say in terms of the schizophrenia in my book, I think the issue is not that whether I'd like to see Bitcoin do this or that. When I describe Bitcoin as being used as a settlement layer, I think of it more as just this is just the economic reality that we see today. If you look at the number of transactions that take place on the Bitcoin network itself, there's somewhere around 300 to 500,000 transactions per day. That's all that Bitcoin does on chain. So those are the number of transactions that are taking place on the Bitcoin network. But then you look at transactions that are taking place on secondary layers, between financial institutions that use Bitcoin or within financial institutions that use Bitcoin, we see a far larger number, which is very difficult to calculate. Probably tenfold is a low bound of that. So on Bitcoin exchanges, people buy and sell Bitcoin without it having to be registered on the Bitcoin blockchain. So that's what is happening, and I think that's how Bitcoin is evolving. And it's not about whether I like it or not. It's just the basic engineering realities of how Bitcoin works is that you're not going to be able to fit too many more transactions than 500,000. Maybe we could get it up to 1 million, 5 million, maybe 10 million, perhaps, but it's not going to be ever enough to fit everybody's coffee transactions on it. So what's going to happen is, I argue, similar to how gold scaled, when gold was being used as the gold standard, it wasn't that physical particles of gold were being moved from everybody's pocket to somebody else's pocket every time they made a purchase. You either had pieces of paper that were backed by gold, or you had checkbooks backed by gold, or you had payments through banks backed by gold. And then at the end of the day, or week, or month, the banks would settle with one another. So for every ounce of gold that moves once, you had 1,000 movements of gold taking place between those intermediaries and trusted parties. And I think with Bitcoin, we're going to see something similar. And then if you think about the Lightning Network, which is an enormously important development on Bitcoin, which I discuss in detail in my next book, The Fiat Standard, I think that's really primarily where we're going to be seeing most of the growth in Bitcoin transactions, which is kind of a trustless way, almost entirely trustless way of carrying out transactions. That's what I arrive at. Now, whether it's going to empower central banks or not, I mean, for me, it doesn't really matter if central banks use them and then continue to exist, because if they are using Bitcoin instead of using their own national currencies, then they don't have seigniorage. And if you take away their seigniorage, then they just need to become responsible financial institutions like any other adult, where you have to pay your bills from your income and you can't spend more than you earn. So if we can get governments and central banks to move to this, to grow from being spoiled teenage brat parasites living off of everybody else into becoming responsible adults fiscally who have to have money first before they spend it, I think that's going to be an enormous win for humanity. Now, whether we eliminate governments completely or not, I think is, um, I don't have a crystal ball. I don't care. I'd like to see governments eliminated completely and replaced entirely by voluntary organizations. But I would settle for just simply declawing the government and making it a friendly little domesticated animal.
Okay. That's a lot of stuff to comment on. Thank you very much for all of that. A couple of things. When you said that Bitcoin was indeed a means to an end, and in that sense, to lead better lives, you basically agreed with me. You are also not going to measure your life in Bitcoins, but more, I hope, in terms of happiness and length of life. And that is the way to sort of then judge Bitcoin as to, is it increasing the stock of that for humanity as a whole? And in that sense, talk of sort of value in terms of dollar assets is neither here nor there. That is then more a transfer of means. Now, I was interested to see the Twitter thing, and that was definitely indicative. But of course, a Twitter survey has its problems, as you indicated itself. There's also a double reading. You could see the increase, as it were, savings ratio saying, well, these people before Bitcoin were not spending their incomes on this, you might say, speculative assets, and are now become addicted to Bitcoin. So perhaps the fact that they're in Bitcoin is the measure of their additional savings. Whether that's a good thing is unknowable unless we know whether they spend their time differently. So that's the point about this, the notion that money ultimately is just a means of time exchange. Do they now spend their time better? Right? Are they now more productive? And that's not what the survey asked. But I was wondering about what kind of research would help with that. Right? I mean, I can imagine that in places which are, as it were, have very parasitical governments, and I can think of a few countries at the moment, whether the people who are Bitcoin adopters there manage to radically change and improve their time allocation during the day as a result of their Bitcoin activities. And maybe something like that exists. I wouldn't be surprised, right? Because I do think that would be, as it were, the strongest argument one could have for saying, look, this thing is doing good, right? And it is allowing people to bypass their governments. Just as, for instance, mobile phone technology has allowed a lot of bypassing of sort of quite parasitic arrangements in Africa and parts of Asia, and hence has allowed improvements in trade. Right? That's been one of the successes of mobile phone technology. And that's one of the arguments for digitization. And so if Bitcoin can have similar evidence behind it of sort of on-the-ground changes in behavior, that would be great, right? Particularly if that's large scale. So in that sense, I'm willing to be convinced, right? Basically that, but I'm saying that would be convincing to a mainstream economic audience. That would matter. Then on the sort of the voluntary governments bit, I have, as it were, a totally different mindset on that, if you like. I am in the current day more for liberties, but as it were, coercion is a fact of any social group. Every social group has social norms and enforces it. There's also always norms such as, you don't steal, you don't kill, you are, as it were, to a limited degree, should one use commons, which are everywhere, such as the environment. There's always externalities. And so coercion is a fact of human life. And of course, also governments have sort of come from a brutal evolutionary struggle. So what preceded the relatively nice governments that we're used to in the West were much more brutal warlord systems in which rape, pillage, and taxation by the sword, or just killing you for your land, was rather normal. And so one has to look at sort of the question of whether governments in their current form are good or bad in a much longer run perspective than the last 20 years. And one has to look at that in a time frame of 10,000 years. And what will the alternatives be? And what happens to a country when central government stops functioning? Well, the first thing that happens when central government stops functioning is a return of warlordism. Right? You see an upflare in violence. You see an upflare in sort of bitter conflicts, which involve a lot of rape, pillage, and the breakdown of lots of sort of trade systems. And so governments are certainly not perfect, and there's a lot of parasitism about governments, but one should not have rose-tinted glasses that, as it were, there is an easy alternative available, which is a voluntary society. There's no such thing. There's never been such a thing. The history of humanity is not one of fluffy bunnies which come together and sort of agree on a whole set of rules. No, we are a rather brutal species in which violence is always a little bit underneath the surface. And also in which case, lots of long-run investments have to be made, of which you and I have both benefited. I mean, I've been to state-run schools. I've been sort of, saved by Western medicine several times, which is state-organized. The institutions have managed to put up ports, roads, all kinds of safeguards and production into my safety and my well-being. So if you look at well-being over time and its corollary, how long people live, that's been on a steady march. And a lot of that has to do with simple health structures. It has to do with improvements in how people handle each other. That has come by very organized campaigns, or sort of, centuries of sort of institutional development. And so, one cannot judge governments as sort of a phenomenon by saying, look, they're doing something bad here now. Because yes, I've written whole books on corruption. With the COVID stuff, I see abuse on a grand scale, but do not mistake, as it were, the awful things that will happen if we'd had no governments at all. Right? I'm under no illusions as to what a brutal species we are underneath. And also the evolution of how governments came to be. They came to replace much nastier systems. And so I, to a certain extent, I feel that that's the wrong way to look at the question, right? Whether or not there's something I now don't agree with and haven't agreed to. I think that one of these German philosophers nicely said about the notion of coercion that it was a crime that he was born because his opinion was never asked about the question. Right? And there are two ways we can read that sort of thing. But I do think, hence, that these questions should not be written as absolutes. Right? I don't think it basically makes sense to talk about, government's ultimately bad and we want to totally get rid of them. It has to be at the margin, right? Can Bitcoin improve the operation of our society as a whole? Can it, as it were, be as a private, a voluntary-led system, which has, as it were, a loss? I mean, the mining is a pure loss. Does it nevertheless, as it were, give enough gain in terms of these improvements of time investment to be worth its while? Right? And at the moment, my answer remains, I don't know, right? But maybe, right? If it's true that there are millions of people, particularly in poor countries, who are now spending their time better, well, then 30 billion doesn't sound so much to pay for that improvement, right? And the transfer from other people to Bitcoin owners, well, that's sort of bad luck for the people who lost out, good luck for the people who are winning. So that's sort of, neither here nor there, and not obviously a huge wealth being lost either. But I think it's important to get away from this notion of from an absolutist notion. Right? I mean, there's no such thing as a coercion-free society. I don't know of one that's ever been. Only in the fantasy land of sort of of certain philosophers has that ever existed. But it's certainly not descriptive of the evolution of humanity or descriptive of what happens when central authorities break down. Things get way worse, and there's then replaced by something that looks like central authority again, right? Not by, as it were, a valhalla of sort of voluntariness. Do you know of that kind of research in developing countries? Is that something in the purview or some of the listeners? Is that kind of thing something that there would be evidence on?
Well, I think really we've gone a surprisingly long time before almost 4 hours we've now been debating both these topics, and we've not really gotten into the kind of meat of the disagreement between my approach to economics, which is the subjectivist Austrian approach, and your empirical approach. And I think this kind of brings us to it, which is, you're looking for a kind of study that would look at, say, 5,000 people in developing countries and see what difference Bitcoin has made to their lives. For me, I think the proof is in the pudding of the market decisions of the things that they actually do. We don't need to have academics study those things. We know that there's $1.2 trillion that are parked in Bitcoin right now. We know that people are currently holding Bitcoin that is worth about $1.2 trillion. We know millions of those people are in poor developing countries. We know many of them are in Venezuela, in Lebanon, in Turkey, in Brazil, and in places that are suffering from inflation. So we know those people are doing that not because they're playing a game. They're doing that because it matters to them, because it helps them do better. So for me, this the subjective decision on the market speak much louder than all the other any kind of empirical test that you could perform. And I'll say this on your point on whether we can have a coercion-free society. I think here we make there's a kind of logical sleight of hand here that happens, which is, well, there's never been a coercion-free society, therefore we need to learn to live. Therefore, coercion is good. And that's similar to saying there's never been a theft-free society, or a murder-free society, or a rape-free society, and therefore, excuse me while I go rape and steal and murder. These things are coercive actions. These things are done where whenever you have any coercive action, you have a victim who is being stolen from or being aggressed against their will. So you're raping someone, or you're murdering, or you're stealing someone, or you're governing someone. All of those things involve somebody being forced to do things that they don't want to do. So, yes, we've never had a purely anarchic society where where all interactions are peaceful. Just because we've also never had a society that has no murder and no theft and no rape and all these kind of other aggressions on people. So yes, those things will always exist, just because humans aren't angels, and we'll always have those things. But there's a big difference between accepting the fact that these things will exist because humans are flawed, and supporting those things. And this is the problem that, in my mind, non-anarchists make when they jump from, well, we've never seen anarchist society, therefore let's go support the government, or that for the government is necessary. No, in fact, first of all, we've seen some examples, and I think I'd urge you to check out Murray Rothbard's book, The Ethics of Liberty, which discusses I think this is the really best treatment of anarchist political philosophy that you could find, and it's well worth examining, because it has a much more it gets into this issue with a lot of detail, and it does mention the examples of Irish society and Icelandic society that were very close to anarchist. But putting that aside, the other kind of logical fallacy here is the idea that life is improving, therefore the state is good. Life is improving because of capital accumulation, because of technological advancement, and because of the Industrial Revolution, and because of the utilization of these energy sources that have changed our life. The last few hundred years with the Industrial Revolution have allowed every human being to move from being able to consume something like the energy of one human body to meet their need, which is what historically most people had access to. And then over the last few hundred years, some of us had access to the energy of a cow or a horse, or these other kinds of animals that could help us with those things. And some of us had access to slaves. And if you were king, you had 100 slaves or maybe 1,000 slaves that you could control and use them to run the lives, to make your life better. But once we've moved to hydrocarbon energy, once we started using coal and gas and oil, now today the average person in the US, for instance, has the services of around 200 humans um, at their disposal every day. You know, you imagine thinking about the services that you're able to get today just by flicking switches. Imagine if you needed human labor to do them. You know, human labor to heat the water in your bath, human labor to light the to get candles and light them, and to make the food and prepare it for you. So this massive increase in the quality of life has been the result of capitalism and capital accumulation and technological innovation. And that is a result of economic freedom. It's the result of people being able to act freely. And that has come as people have moved away from economic systems that were built, and from political systems that were highly exploitative and highly coercive, toward economic and political systems that are highly conducive toward liberty. So people have become freer over the past hundreds of years, predominantly, I think, in the West. You know, you compare the average Westerner in, say, 1400, living as a serf, versus the average Westerner in 2018, let's say. Let's not say 2020, since COVID really takes us back to the 14th century. But you know, for the average Westerner, um, life has gotten much freer, and the government has gotten much weaker. And by government, you know, it could be the modern government, or it could be the local serf owner that used to own them. The ability of others to control people and to coerce them has declined, in a sense, leading. And I'm not, you know, this isn't kind of this isn't millennialism, that you know, history necessarily always marches in the direction of things being better. But in the last few hundred years, I think you can see that trend in the West happening. And as a result of that, as a result of the limiting of the power of government and the increase in the sovereignty and the freedom of the individual, we see all of these amazing innovations come along that change people's lives and improve people's lives and make people's lives better. And of course, the government, and you know, you yourself said you're the beneficiary of government education, so it's clearly you may consider the hypothesis that you're slightly biased here into thinking that the government was instrumental in this, when in fact it's the other way around. And when we talk about the examples of society collapsing when the government collapses, I think what we're missing here is that what happens when government collapses, or governments only really collapse when their money collapses. And so, you know, when they establish a monopoly on the money and then they collapse and their money collapses, society is taken back to as a state of no division of labor. And without the division of labor, society falls apart. So you know, it's they take society hostage by forcing society to use their money, and then they use that money as a way of exploiting society. And then when that scam falls apart, you can't really take that as an evidence. See, you know, without government, things won't work so well. Well, without government, if people had the freedom to have their money, then things would have worked arguably better. And I think, you know, it's very difficult to look at the 20th century and say that having more coercion, more government leads to more freedom and more productivity and more any good thing that you want to think of. You know, think about China versus Hong Kong, think about East Germany versus West Germany, think about North Korea versus South Korea. Yes, Hong Kong, South Korea, and West Germany are not anarchist utopias, but they're far closer to the anarchist utopia than East Germany, North Korea, and communist China. And the difference is, you know, it's very clear. So, you know, communists will tell you, well, communism has never been tried, and that's true. And pure capitalism and pure anarchism has also never been tried. But we've come close to both. We've come close in Cambodia to real communism, and the result was, you know, an eighth of the population died, or more than an eighth of the population, about a seventh or sixth of the population died and starved when they, you know, banned money and banned cities and forced everybody to go out and work in the field. That was the closest we got to real communism. And the closest we got to real capitalism was Hong Kong and Switzerland, and that was real capitalism. That was close to real capitalism and real anarchism, and it worked really well. So it's a very difficult sell to try and convince me that you know, what was making Switzerland prosperous was the fact that they had a little bit of you know, the parts that were not anarchist about them were what made them well off.
Well, we're approaching more and more empirics as we come along. So, you know, thank you very much. That is my territory. I hope you do agree. And so on Cambodia, of course, they were bombed by the US, sort of causing 1 million people to die. So, you know, if that is the result of US capitalism, oh, whoa. But I want to pick up a couple of things there. I think that I hate to use the word, but I'll use it. When you admit it, that Bitcoin is basically a means to an end for people to make better choices with their life, so that indeed money is a lubricant when it comes to time trade. That is hence saying that, okay, money serves a social function at the end of the day, and that hence the $1.2 trillion is valuable for the people who have it. But at the end of the day, it's a transfer of that call on the time of others. And so in that sense, it's neither here or there. It's sort of zero sum for society as a whole. And that we should look at Bitcoin as costing that 30 billion of mining. That's the investment of society as a whole. And the benefits are yet to be empirically established then. And then I want to talk about a couple of points that you talked about, right? One is, which is an important point to make. I've written an awful lot in my life on how the nation state came about. I have a large book on this in 2013 called An Economic Theory of Love, Greed, Groups and Networks. And that was very much on the history of how the nation state came to be, what it replaced, how it sort of works from a sociological, anthropological and psychological perspective. So, how we relate to the state, how authority comes in that, but also as it were, credence of it, the love that people have, the notion of a national people. So there's an awful lot to say about that. And I feel we can sort of spend another 2 hours at least talking about some aspects of that. But I think it's important for me to disagree with some of the central points of what you say. And I think that there are two most important points. One is this notion that coercion free is possible, because even property needs coercion. Respect for property, which includes respect for Bitcoin property, right? It needs some notion of coercion, because property by itself has a coercive aspect to it. It is an illiberalism to me that I cannot touch the property of other people. So they may gain the freedom. They may gain the freedom of having, as it were, monopoly rights for the uses of property, but by itself, it is a social construct of
That's
coercion.
just the state education.
No, that basically has that element to it, which is I'm forced to recognize the property of others by my social group. Right? It is social groups which have invented property, and in fact, it is a social invention. Now, there is a second point to say on this. So even at its very basic elements, coercion is baked into societies. Right? We discovered it as a means of sort of organizing ourselves. And I was sort of picking on property as one of the textbook's examples. But capitalism is a very interesting beast. It is not what many people think it is. Capitalism is not a libertarian or purely liberal thing. It is a strange hybrid, which is made up of full of sort of rules which have, as it were, an ecosystem of private property, but also lack of property. Right? There is a dead man zone in the middle of capitalism, which allows it to work. And a great example of that is the modern limited liability corporation, which is a little bit like a magic, if you like. Right? It is not truly owned by people. People can have stakes in it, but then there are possibilities of controlling it, taking out aspects of limited liability companies. One can sue them, but then if they go bankrupt, nobody's really responsible for it, which also means that the deals corporations do with others are not full deals in the sense that there's no ultimate liability for people over those deals. And capitalism grew out of, thousands of years of sort of institutional development. Capitalism is this very strange hybrid beast, which has elements of liberty in it, but also has high elements of coercion in it, and is totally mediated by groups, right? I mean, Adam Smith talked of this very nicely when he talked about good competition and bad competition and the role of the state to sort of, weed out the bad and the good. And capitalism in that sense comes in many shapes and sizes, but all of it is pretty much, only possible because of it's being, as it were, held up by social institutions, which have been the outcome of hundreds of years. So I'm not in as it were, the type of person who says, well, look, we need to do away with nation states. This and that. I'm a reformer. I'm saying, look, this is now working badly, right? I'm not saying I hence support the country as it is at the moment, but I am saying we need to identify what's bad about our countries at the moment and try and reform that, try and get rid of that. That's piecemeal. That is indeed empirical based. It's okay, well, why is this not working? Why is that not working? How can we improve that? And so, in that sense, I'm very much an institutional economist who sort of is working on the mix of institutions. And that's also been my work in the UK. It's my work here in Saudi. It is basically helping countries figure out how to improve things. But of course, that helping can be done by all kinds of groups, right? Sometimes, as it were, a country improves because there's a radical group which truly challenges, disrupts, as it were, part of the technology of society, and then sort of pushes to improve things. Sometimes it's revolutionary, as in the French Revolution. Sometimes there's 2 steps back, 3 steps forward, and that can take many decades. But I do see it in such terms that we're looking at evolutionary change of institutions, but that you should see our society as a whole as an enormous collection of institutions together with these capital stocks that co-move and improve. But since we're on the empirical topic of, have states been good for, as it were, what makes life worthwhile, there is masses of research on this. Right? If you look at the increase in life expectancy since the 1840s, in which it was still about 40, 45, even in places like the UK, what has led to, what have been the big things? All state-led. So sewage, that was state investment, right? Clean water, huge state investment. That wasn't private, right? Clean fuel, that was enormously important, as it were, to get rid of a lot of the respiratory disease aspects, but also just the sheer lung damage that was done from the previous ways of cooking. That required fantastic coordination, or lots of coercion, but it saved millions of people. Same too for some of the successes of modern medicine, like statins, which has sort of, increased life expectancy by years in Western countries. Right? So, the GP system, which is very much a government set up system and is much better functioning in places with a national health system, which is much cheaper than a private health system, which has all kinds of market failures in it in a place like the US. So just from an empirical point of view, government in the West have been hugely instrumental in the last 150 years in increasing the longevity and also the quality of life that people lead. Particularly in Western Europe, of course, until COVID, it was near paradise, right? Crime levels were at historical lows, were almost never as low as they were in 2019. Universal reading and education, right? People could decide on their own sexuality. Basically, there were sort of, fantastic lives, right? Zero evidence that statins work. Well, I beg to differ on the
No,
block.
actually, a lot of evidence that statins are the biggest scam in modern medicine, which is saying a lot because modern medicine has a lot of scams. In
Well,
fact,
modern medicine has a lot of scams, but I would not count
none as
statins.
big as statins. Absolutely none as big as statins.
Well,
And I think this is,
we can then have another long conversation about statins because that will take hours. Look, I've been a professor of health economics for 10 years, so we can have a long go on statins.
I will say this. I think, the examples that you mentioned, it's great that you mentioned statins because it's kind of, it saves me from having to go into all the other ones because you enormously discredited your argument by just mentioning that example. It's very clear, unfortunately, that this is, you come from government-funded institutions that repeat government talking points on those aspects. So I highly recommend the book called The Cholesterol Con. And the statins have been absolutely devastating for people's health. There's no evidence they work, and they've only worked for one thing, which is pharmaceutical company profits. And they're absolutely devastating. And of course, the science behind them, the idea that cholesterol is bad and you need to bring it down, it's all pseudoscientific nonsense. Of course, the main problem I have with what you're saying, I think we need to start wrapping up. Time is running down. I think the main problem I would say is the first idea that property is needed for coercion. I think this is a fundamental misunderstanding, and it lies at the heart of state propaganda. Because in state propaganda, you have to communicate to people the idea that actually a peaceful society is not possible and that violence is inevitable, and therefore that's why we have to do violence and that's why the state is violent. But a peaceful society is possible and property is possible without violence. In fact, that's the only way that property is possible, and it's very simple. Legitimate property is property that people acquire either by homesteading or by acquiring it through mutually agreeable trade with another person. So either I get a piece of land that nobody claims and I claim it myself and then it becomes legitimately mine, or I take a piece of land from somebody who has it by giving them something that they accept as an exchange for it. So you can have an entire system of property that does not require violence. And the only people who say that property requires violence, of course, are governments, because they rely on violence. They are born in coercion and theft, and they need to manufacture this, and that's what they do in their statist indoctrination torture camps that is the modern education system. But in fact, I think the key point to keep in mind is that everything good that we have comes from consensual activity. Everything comes from people acting doing good things for one another because they agree with, because they want to serve one another, because they benefit from it. And then the state comes in and basically, takes credit for whatever is good and teaches, writes in the books that this is what is good, and then forces people to, and then, of course, uses it to finance its own parasitic activities. I think the examples that you mentioned about public health are very far off the mark, because in reality, the state's interventions in public health have been devastating in many, many, many ways. The history books don't like to mention this. Just look at just look at the dietary recommendations of governments over the last 50 years. You could make a case for them being genocidal. I don't think the intent was genocidal, but telling people to eat 6 to 10 rations of grain every day is just a recipe for diabetes. That's what the state has been doing, and of course, it's also a recipe for getting people to take statins, which is another aspect of it. So I think, now we're getting into the point where there's a very large difference. But, the good thing, now we're out of time, so I'm just going to go ahead and end on a positive note, which is that the good thing about Bitcoin is that it makes all these arguments kind of moot. It doesn't really matter anymore because we're just going to defund the state, whether you like it or not. Your government money is just not going to be good anymore. It's just going to continue. It's gone from 100 billion to 1,500 satoshis. We're more than 99.999% of the way uh, to zero. So we're we're continuing down that path, and governments are going to have to learn to start becoming more productive if they want to have people, if they want to have the success of people, they want to have the consent of people. They need to be more and more productive, because I think Bitcoin defangs the state in a very, very, very powerful way. Um,
Okay,
okay,
let
go
me
ahead.
then wrap up from my end as well, if this is the end of it. So, thank you very much for a very fruitful conversation. I think I certainly learned a lot more about Bitcoin and about our aspects of agreement and disagreement. And indeed, we can go on a long time about many, many topics. But I will say that, as it were, um, from a mainstream economic perspective, I feel convinced that it is possible that Bitcoin is having large positive elements if it is indeed true that it has allowed people access to time trades with themselves over time in situations where otherwise that does not exist and is not available to them. And when it comes to improving, as it were, the state and wanting the state to up its game, I'm all for that. So that is very much also how I see Bitcoin as a potential disruptive technology. And whether or not it improves, as it were, our institutions and, as it were, is itself a jolt in the right direction, we will see, right? We will see. I don't see it as impossible, but at the moment it is still, as it were, who knows? And thank you very much for your time.
Thank you. Thank you so much. I'm sure we're going to have you over again. This has been extremely enjoyable with all the disagreement.